I'm reviewing this investment property, and if it's good, I'm going to sign the contract and potentially buy it. But if it's not, I'm going to downgrade the home builder on our publicly available list of the developers we recommend and the ones that we don't. And through this, you're going to learn how to find a good investment property. Could this one be a $500,000 mistake for an investor? The developer's not going to like me for this. It's a 2-bedroom townhouse in Christchurch, based in Phillipstown. Now, Phillipstown isn't the flashiest of suburbs, but that's a good thing because property prices are lower and there's going to be a lot of potential tenants. Now, the photos look nice, and if I look at the floor plans, downstairs we've got a kitchen, a laundry, a living area, and if we head up the stairs, what have we got? 2 bedrooms, bedroom 1, bedroom 2, and a bathroom. Pretty standard. But these photos and floor plans not going to tell me whether it's a good investment or not. To do that, we need to look at the numbers. The first thing we need to look at is price. Now, this one is $559,000, but is that cheap or is it expensive? What we need to do is pull up a spreadsheet and start comparing this with other properties. So we need to look at price, bedrooms, bathrooms, car park, and floor area. And what you do is go to developers' websites, in this case Wolfbrook, and start looking at their properties to get a sense of, is it cheap, is it expensive? So we're looking at 2-bedroom properties in Christchurch, and I already know that McLean Street is similar because it's in a neighbouring suburb. If we look at that, prices start from $569,000, and we need to start by looking at specific units because in a development, there will be multiple units where they have slight differences between them. So we need to look at specific units to get a good comparison. Let's download that brochure. Now, when you get a property pack or a brochure from a developer, here's what you do. You scroll past all of the marketing stuff because none of that matters. Come back to it later. What we are looking for is this, a table that shows the specifics on each unit. We're looking at unit 2, where there are 2 bedrooms, 2 bathrooms, 1 car park, 82 square meters. I'm going to take that and put that into the spreadsheet. If you're doing this at home, you'd then repeat this for all similar properties you could find from Wolfbrook. Then we'll start to look at Williams Court, Brooksfield, and any other Christchurch property developers you can think of. If you get stuck, Google Christchurch property developers. I found 9 other properties that are similar in terms of location and spec to the one I'm thinking about buying. And I can see that the one I'm thinking of from Aventus Projects is the cheapest on the list. The reason I like that is when I look at where this property is located, although it is the cheapest, it's also the closest to Christchurch Central. Now, could I find a cheaper property than that in Christchurch? Yes, but I would need to go out further away from the city. So I like the price, but the price isn't the only thing to look for. So which of these 10 properties is going to give me the best return? The way you figure that out is by downloading my return on investment spreadsheet. And this is where you can put in 3 different properties and compare them from a cash flow and return perspective. So I'm going to compare Cross Street to one from Wolfbrook and another one by Williams Corporation. And I've already put in all of the details I need to. So purchase price, interest rates, rent, and all of the usual costs. So rates, insurance, maintenance, any residents association, and also how long it's going to take to build that property. And this spreadsheet gives us a 15-year forecast on what the cash flow is for each of the 3 properties. And you can see for all of them, they initially start out negatively geared. That's because the rent doesn't cover all of the mortgage costs, the rates, insurance, maintenance. That is very usual for an investment property today at current interest rates. But for this property that I'm looking at, I can see that the cash flow becomes positive earlier than the Williams Corp or the Wolfbrook. And you can download this spreadsheet completely for free. The link's down in the description. And if you do that and run the numbers at home, the one to look at, the line to look at is the return on investment. Because this says, for every dollar I invest into a property, how many dollars do I get back in 15 years? For Cross Street, for every dollar I put in, I get that dollar back plus an additional $2.36. Compare that to Wolfbrook, I get back my dollar and $2.14. For Williams Corp, I get back my dollar plus $2.20. So based on the numbers, I can say that out of these 3, Cross Street is likely to be the best investment. So what am I going to do? If I was a newbie investor, the first thing I'd do is subscribe to our YouTube channel. We release new videos every Monday and Wednesday. But after that, because I like the price, because I like the location, because I like the return on investment, I'm going to sign this contract and potentially spend $559,000 of my own money to purchase it. But let me be really clear. Just by signing the contract, that doesn't mean that I have bought the property. As soon as I sign, I then have 10 working days to do more due diligence on the property and confirm that it is the right one for me. This is exactly the same process that we work with all of our investors here at Opus Partners. So my next step after I sign this contract is going to be to call my mortgage broker, see if I can get the money for it, and then also talk to my lawyer to confirm that they're happy with the contract.